Hey, good morning, everybody. It's Hammer. Today is Monday, July 21st, 2025. I, of course, am here with your daily mortgage rate update. Thank you for joining me today. Appreciate you being here. And before you state the obvious, yes, I don't have my hat. I left it on the bike last night and wasn't going to run all the way down and get it. I'll give you the full biker hammer look, though. Here you go. Here is the full biker hammer look. I get treated differently when I walk around like this versus when I'm that nice guy with a cowboy hat. Kind of funny. Kind of funny. So, anyway, good morning, y'all. Thank you for joining me. Hope you all had a fantastic weekend. I did. I had a great time last week over at Veta VA Summer Camp. Once again, thank you to Nathan Nottingham, Christopher Griffith for hosting us, for all of the great sponsors, EPM and Rocket Pro. So, we'll talk about that some other time. But yeah, they were big sponsors for the event as well. So, and thank you to all of you that went. It was fun to see so many of you that are that I know. It was great to have you there. So, anyway, this morning we are going to be talking about quiet economic calendar this week. What's going to move rates instead, and a little bit more about that Trump Powell drama. Love me some Trump Powell drama. So remember, you can join me live each and every weekday morning, 9:30 a.m. Eastern time. If you're here this morning, say good morning. If you're watching the replay, don't forget, give me a hashtag replay on the comments. Let me know that you were here at Facebook or YouTube and know that you were here as well. Look at the camera zooming in and out like crazy. I don't even know. I can't get to the setting to turn it off on this one. So anyway, if you are here, don't forget, if you're on Facebook, give us a thumbs up, subscribe on YouTube, all that good stuff, and how that goes. Also, if you would like a quick reminder that I'm going live each morning, you can sign up for a text reminder at hmmr.io/reminder or use this cool QR code over here. So, all right, let's just go ahead and say hi to all the live folks here this morning. Appreciate you being here. Good morning. And then we'll go ahead and jump in and get started. So giddy up, Mr. Randy Teakle. Thank you again for you and your boys for running the station, of course, for sharing Barbara with us. And congratulations, Grandpa. So excited for y'all. That'll be fantastic. Rob Stewart, good morning, sir. And Tim Klyla, Brandy Brickler. Brandy, it was wonderful to see you, even though you didn't even realize I was riding next to you as you were leaving. It was so funny. Mike Tebow, good to see you, sir. Mallory Fotiadis, Kyle Mazikas. Y'all that I am not naming, you guys have to come to summer camp next year. We'll tell you more about it. Amy Blauser, Mark Clark, good morning. Ron Siegel, good to see you, sir. Ron, don't you have a day for us, man? Aren't you going to tell us a little bit about, like, what's today's big day, dude? Come on, don't let me down. Mike Brown, good morning. Allison Foy, Dib Dickinson. Randy Teagle, the Rocket Pro swag light. I have to check that out. I think it was a light and a lighter. So that might be cool for me for my cigars. Harry Dennis, good morning. Tom Dedmore, great to see you as well. All right, y'all. So let's go ahead and jump into the good stuff. I do have a question of the day for you. This one is a little controversial, but I kind of want to get your guys' opinion on this. I mean, after all, why not have a little controversy once in a while and have a little fun, right? So let's see. I got so many different headlines on here. Let me see. Here it is. Trump threatens Washington Commanders Stadium that they're building over in Washington, D.C. over name change. Now, I don't know that he really went nuts doing it. He said, I may put a restriction on them that if they don't change the name back to the original Washington Redskins and get rid of the ridiculous moniker Washington Commanders, I won't make a deal for them to build a stadium in Washington. I'm just curious what y'all think. Do you think that the president should be weighing in and trying to influence professional sports teams? He's also done something similar, weighed in on the Cleveland Indians became the Cleveland Guardians, I think they are now. So, I mean, he can have an opinion on things, but should he be trying to influence it? Should he be threatening to not do the stadium if they don't? I'm just curious on your guys' take on that. My take on that, I think he's got other things to worry about. I don't think he should be. You want to throw your opinion out there. We all have opinions. You want to share it, fine. Should you be trying to influence it? No. No, that's not what the president should be doing. So, all right, that said, let's get to the other good stuff. You guys let me know in the comments. I'm curious on your take on that. I know that it's funny because, hold on, I'll stop sharing now and go over this. So it's funny because the people, the big Trump supporters, and even Siegel said, he's got a little fatigue when it comes to the Trump supporting, but the diehard Trump supporters will be like, he's getting rid of the woke stuff, and like they'll support this. That people that hate Trump will talk about how he's overstepping and everything else, but I'm in the middle. Like, I don't love Trump. I don't hate Trump. I'm curious. I think a lot of you are that way too. I mean, I could be wrong, but I'm just curious on people's takes on that. Like, where do people come from on that? Do they think it's a good thing? Like I said, I think a Trump supporter, some of them are going to think that that's fantastic and he should be doing all these things. The haters will, of course, think he shouldn't be doing any of it. I'm kind of in the middle, and I don't like that one. So just curious what you guys think. So let me know in the comments. I would like to know if you don't mind. All right. So here's where we're at as far as rates and pricing and everything. I'll show you the charts in a minute. Friday was flat. Things didn't really move after the show on Friday. Things were quiet. We knew they would be. It was a summer day on Wall Street. Generally, we're going to see very low trading volumes on Fridays as we get through the rest of the summer. Not usually anything that we have to worry about. There were, of course, no concerns about reprices better or reprices worse. Now, rate sheets this morning, though, are going to improve a little bit. Mortgage-backed securities are up a little bit on the day. I'll show you that in a minute. Not a huge recovery, but you should see some better pricing this morning. And in fact, all right, let me go ahead and go over to the charts and we'll share that stuff and I'll come back to it. So looking here with what we've got on Friday, it was flat, just a quiet day as we would expect. And as we talked about this morning, though, you can see there's a bit of a jump. We are up higher on the day. Pricing came out yesterday right about here. Today, that's right about here. Of course, when our little man is climbing the mountain, that gives us a smiley face because that means that higher bond prices improving, going higher. Higher is good for pricing, gives us better mortgage pricing this morning. So, I mean, overall, what were we at as pricing came out yesterday? We were around 99.23. We're around 99.36. That's about 13 basis points. It's not a huge difference. You're going to see just a smidge better pricing on the day. Not a huge amount. If we actually look over here at Mortgage News Daily as a reference point and take a look here, you could see that, you're going to see this, right? We've seen after last Tuesday was our worst level that we hit, 6.85 here. And then we've kind of been ticking back down, 6.83, 6.82, 6.81. And that coordinates with what we've seen over here when we look at mortgage bonds. That coordinates with, here was Tuesday's worst pricing that you saw right there. And then, now we've got improvement here, improvement here, improvement here. So Tuesday, Wednesday, Thursday, Friday, and then here is today, and it is improving. So we've seen that nice tick up, back up, and there really hasn't been any strong reason why. We've seen some of that, but not a huge reason. So anyway, pricing today should be a little bit better. Reprice risk on the day is low. Very unlikely that we have to worry about. I can't see what you guys are seeing, by the way. So it's very unlikely we have to worry about rate sheets getting worse today. Should be a quiet day. Not much we have to worry about with that. Let me go ahead and pop this back on full screen so you guys can. When we look at the 10-year Treasury yield, that also, look down here. Remember, yields, we want yields to go down. It's opposite of pricing. Okay, so that has been the lowest that we have seen since back here on July 10th. We've been spending a lot of time higher, and you could see that today brings that 10-year Treasury yield below this red line, which is the 50-day moving average. And then arguably improving from here would be difficult because we've got this blue line and this purple line, which is the blue line is the 25-day moving average. The purple line is the 200-day moving average, and they converge there. I'm not too worried about the technicals, though. Bonds have not been paying a lot of attention to the technicals. In other words, we can look and say, well, we got a bounce here or we got some support here, but take a look with mortgage bonds. We blew through the technicals, through all these moving averages to get down here, right? We blew right through them, and then we blew right through them coming back up. These moving averages are not playing a large role in containing mortgage bonds or in containing 10-year Treasury yields. So I wouldn't worry too much about that. Now, the outlook this week is that we're going to see rate sheets continue to drift this week. It's unlikely that we see too much move. Next week, though, is going to be a very busy week. Next week, we're going to have the actual Fed meeting. Is it next week? Yeah, it's the middle of next week. So we're going to have the actual Fed meeting in the middle of next week. And August 1st, which will be Friday, we get BLS jobs data. So there's a lot more potential volatility for rates next week. This week, though, should be a pretty calm week. We had some housing data. Otherwise, there's really not much else going on as far as rates and pricing there. So Morano thinks it's harmless. It might be. It might be. You're saying he's trolling people. Going back to the question about Trump, let's go back on there and we'll hit that. And then I'm going to come in and we're going to talk about Trump. And then we're going to talk about Trump and Powell and rates. So we are going to get back on track. So stick with me. This is not just me rambling. We're going to get back on track on this one. But my question of the day was, do you think that the president should be weighing in and influencing the names on potential sports teams? Morano says that he thinks that he's just kind of trolling, that he's trying to trigger people and that he's goofing around. I don't know that I feel quite that way, but hey. Tom Stafford spent 10 minutes looking for my man in the cowboy hat. I know, man, but it's on the bike. So Katie Colgan is on the replay. No, Katie, we're live still. Who are the stupids that changed it? Exactly. I don't disagree. But again, I'm not Native American, so I don't know that I do find it so offensive or anything, but I'm never big on politically correct, am I? Tom Demore said he didn't think he should be involved. He has nothing to do with the national good. Exactly. Yeah, I agree. Bigger fish to fry. So you guys kind of have the same thing with me as well. So there, Tim Kyle is now. Pop, you're gonna be Pops, not Grandpa. You're gonna be Pops. All right, Pops. I'll make sure I call you Pops. Today is National Junk Food Day. Ron Siegel says, and what's your favorite junk food? So let's change up our question of the day now that Siegel gave me something better to go with. What is your favorite junk food? Let me know in the comments. What is your favorite junk food? Curious about that. So let's talk. We're talking about Trump and Powell. Let me throw it back up on the screen, and we'll go over this. So this part actually does matter. I want to show you guys. There's so much misinformation about what is going on with the Fed. And people think that if Powell were to be replaced and somebody were to lower rates, that things would improve. Now, I've gone deep on this and I've shown you guys that this is not the case. Today on my written lock advice, I kind of went over that. But let's just show you a couple of things that are actually, new on that front, and I'll kind of go over it with you. So let me bring up my screen and I'll show you those headlines and those articles that are relevant here. So, all right. So the first thing is the tariffs. The tariffs that we're watching, these are going to be affecting rates this week, is conversations about this. Basically, the European Union tariffs are a big deal. And also the reciprocal tariffs are a big deal. Right now, we have no tariffs on airplane stuff, airplane parts. And you've got the EU and the UK talking about putting tariffs on Boeing, and there's a whole big thing here. So this is definitely affecting trades and trading. Now, when it comes to Trump and, I'll go to the Trump Powell thing in a minute, but Treasury's edge higher as tariff concerns add to Haven demand. I don't know that we're seeing a huge move, but I mean, arguably the improvement that we're seeing right now could arguably be attributed to the Haven demand, right? So treasuries rose, tracking gains in European bonds as the looming deadline on U.S. tariffs fanned demand for Haven assets. Now, one thing we have to remember, we've seen it before, we'll see it again, is that Trump definitely will move the target. And August 1st is a date, but it might, it's not the only date. It's no argument that things might not get moved. 10-year yield slipped 4 basis points to 4.38. It's lowest since July 11th, actually July 10th. U.S. and European officials are continuing trade talks this week. The lack of a breakthrough so far has raised the risk that 30% tariff might come into effect next month. Again, August 1st is the date on that. Fears about tariff risks and the August 1st trade line are adding to a risk-off tone for markets. I think they're giving a little too much credit to this, but arguably we are seeing a little bit of improvement, leading to a small reallocation of money as it moves out of equities into safer assets like treasuries. So that could be part of what is kind of affecting things this week again, especially with lack of other data. Now, let's talk a little bit more about this. So I keep getting asked about this outside of the live, right? Why the Federal Reserve's building renovations are 2.5 billion. There's an article on Bloomberg, and you can read their articles for free. I think you get 2 or 3 articles for free. Use an incognito window. Go read this article. So it's more than just new paint and a spiffing up of the building. I was wondering, I'm like, why are they spending? First of all, it was supposed to be 1.7 million. Now it's 2.5, or I'm sorry, 1.7 billion. Now it's 2.5 billion. That's because of the inflation. They started this thing before COVID, and it's just like everything else. The price has gone up tremendously, almost doubling. So that's exactly what I see when I do stuff in my house. And that's what they're saying here. But this really gives you an idea of what they're doing to this building and how much this renovation really is. The building was built in 1931. It's almost 100 years old. There hasn't been anything done to it. And even Powell said, I don't know if it was in this article, but Powell had said in front of Congress, he's like, nobody wants to be the one. Let me throw my face up here. Powell was like, nobody wants to be the one to take on these renovations, right? Because they cost money, and I don't know if you guys can read the article, but I'll just go through it with you, right? But they cost money. They take on these things. They're not popular. So nobody's really dealt with it. And before he was Fed chair, he was whatever department, and he saw just how these buildings are. But they're doing crazy, crazy things. 5-story addition to the north side of the building, 4 extra floors below grade. They're, expanding the campus, converting a parking deck underneath into additional office space. I mean, what they're doing is they're keeping the shell of this building, but they're building an entire building underneath and around this building. And because of the historic, nature of this, there's a lot that they can't do, and there's a lot of departments it has to go through, and blah, blah, blah. But anyway, there's no fraud here. There's nothing here. And that leads us to the second thing, which is, there's this back and forth, and we saw it last week when Trump argued about, or when Trump floated the idea of firing Powell. Markets do not like this. It's not good. So right now we're seeing some movement in what's called the Powell hedge. That's what they're calling this, the Powell hedge. And let me just change to full screen so you guys can see what I'm saying. Am I doing a $2.5 billion renovation to my house? No. Do I think that they should be doing a $2.5 billion renovation to the Fed building? Probably not, but I don't know for sure. So anyway, right here though, this is the important part, right? So what you're seeing is the theory of the new Fed chair would be more likely to fall in line with Trump's lobbying for lower interest rates, would push down short-term yields. And this is what everyone needs to remember. Short-term yields are 2-year treasuries, not 10-year treasuries. 10-year treasuries are long-term yields. So easier monetary policy coupled with the perceived loss of the central bank's independence could stoke inflation. And that's why this is not good for mortgage-backed securities and 10-year treasury yields, with the idea that Trump would try to force out Powell and put somebody in there to lower rates. So it's driving yields on long-term debt higher. And that's what we see. That's why we see a negative reaction in mortgage rates to the idea of Trump trying to get rid of Powell. Like many on Wall Street and beyond, Van Gielen is taking the once unthinkable threat seriously, and that means protecting against it. That's why even after Wednesday's knee-jerk moves reversed a bit when Trump downplayed any imminent plan to force out Powell, he stuck to his recommendation. Others are doing the same. And that recommendation, let me see if it's this... that recommendation is basically dumping 10 years and picking up 2 years, trying to see where they say that, right? So basically the idea that we're seeing, all right, I'll just turn that off and the idea that we're seeing, Trump threaten to fire Powell, market's reaction to that is not good for mortgage-backed securities and 10 Treasury yield. Now, right now, there's other variables that are more at play, which is why we're seeing decent pricing this morning. Rate sheets are improving a little bit, but overall, the idea for those of you that think like if Powell were to be replaced, it would cause anything, and it wouldn't. And I bring receipts again. I pointed this out before. I'll point it out again. Let me share the screen one more time, and then we'll wrap up and get out of here. So, well, before the Fed had cut rates, when we went back here and you look at September, look at the best rates. They're right here in September. And in fact, if we look at the date on those, the meeting was the 17th and 18th, by the way. Look at where rates were. Rates were at their lowest right here before the Fed meeting, when everybody knew the Fed was going to start cutting. The Fed cut rates. They cut rates a half a point. They cut rates another quarter point in November, 0.25. They cut rates in December, 0.25. And take a look at this. Where are mortgage rates? Right here before this is equals 1 point. 1 point in rate cuts. Fed rate cut has gone down 1 point. Mortgage rates 6.11. And where are they now? They're not at 6.11. This is higher, folks. I bring receipts. If the Fed were to cut rates, it does not necessarily mean mortgage rates go down. The reason we see mortgage rates go down and we talk about the Fed cutting rates is all of the different economic activity that happens around that. If the Fed is cutting rates, that means that inflation is going down, and that's a big component. We know that that's one of the main things that affects bond pricing and the 10-year Treasury yield and all that. Again, oversimplified, but yet in our world, it's a big indicator. So the idea of Fed rate cuts coming are what we react to, not the actual Fed rate cuts. And if we had the idea that the Fed was going to cut more, what would happen is it would overstimulate the economy, which would raise inflation, which would hurt bonds. So don't get so excited about that. Britain's and bean dips or chips and salsa. Oh, we're back to talking about the good stuff. So Ron said, hard to fathom what 2.5 billion is. Resort in Las Vegas costs 2.7 billion, which is approximately 4 billion in inflation adjusted. Yeah, I mean, these projects go on for years, and it is what it is. I mean, it's our government. They're supposed to have oversight on how the money is spent. But I'm just commenting on the idea of, is there any fraud? There's no fraud. There's nothing ridiculous going on here. There's no fraud. There's nothing that would have any. Randy, I'm with you about Fritos. Definitely a good junk food. What else is your favorite junk food, people? Let's end on a fun note. Deb Dickinson, Red Vines. That's a whole nother dispute. Red Vines versus Twizzlers. Red Vines versus Twizzlers, right? Yeah, they did the Washington Redskins. Anyway, I'm not even going to keep going down on that one. I'm with you though. They're changing from dial-up to Wi-Fi to get faster internet. I can tell you that's expensive. I've been through it. Chips, potato chips. Everyone's favorite junk food: chips, potato chips. Yeah, I'm with you. My favorite junk food, I don't know, probably cookies. All right, my friends. Well, I'm gonna wrap it up. Thank you again for joining me. I appreciate it. Hope this was good for y'all. Tomorrow, not going to be much different that's to talk about tomorrow. It's probably going to be a quick one. There's nothing going on this week. It's going to be a quiet week, so we'll just be monitoring where things are at. As far as locking and floating goes, float everything. There's no reason to lock right now. The momentum is on our side. We've seen some really positive movement. Let me go ahead and throw that up on the screen just so that it picks up in the whatchamacallit. Captions, lock advice. Float them all. There you go. So, of course, cautiously floating for anything closing near term. If we do see signs of trouble, we'll look to lock that. But loans closing in 30 days. Next week's going to be the big week. We've got to get closer to see where we think things are going. Powell does talk tomorrow, but he's not going to be talking about monetary policy. I was confused because I didn't think they talked at all during their blackout period. We're in the blackout period before a Fed meeting. It's the Saturday before the meeting. It's about 10 days before the Fed meeting where the Fed is on the blackout. So they can talk. They're going to be talking about banking policy. He's going to be addressing banking policy. So he's not going to take questions or address monetary policy. policy. So there will be, so it's almost like he's not talking, because he's going to be talking about that stuff. He's not going to be addressing monetary policy, because they're basically during a blackout period for that. So anyway, my friends, well, Mahan, thanks for coming. That's all right. Start from the beginning. That's all right. Yeah, Ron, that's just, I'm not even going there. So peanut M&Ms are awesome, though. I'm with you there. So, all right, y'all, have a fantastic one. I'll see you tomorrow. Make it a great one. Bye-bye.